All right, so I know I haven't made a video for a while or put out any content. We've been busy building out new pipelines and working with some new data that hopefully we'll have released for you all here shortly in the next couple weeks. I did want to talk about Plains and some of the bolt-on acquisitions that they've done. Now, none of these are going to be material to the company in any huge way. It's not going to move the needle much as far as company-wide earnings. But I do like to look at these for a data point. Some of these small acquisitions can, at least for me, when I'm thinking about investing my money, I think about them as like a data point to see, hey, can we look at these acquisitions and see the economics behind them, the logic behind them, to see if management's doing a good job of allocating capital. So I thought it would be interesting given they've done a lot of bolt-on acquisitions over the last couple of years and announced two more here on their earnings last week. I thought it'd be interesting to dive into those. And the first one, and we'll dive into this one mostly. This is the most of this video is going to be on the Cheyenne Pipeline, just because I have more publicly available data and information on that pipeline. But they did announce a acquisition of a small Permian gathering system too. I will briefly talk about that, but I'll be honest, I'm pretty deep in the weeds on a lot of the Permian pipelines, and I'd never heard of that pipeline or gathering system before. There is a little bit of information out there, so I'll talk about that as well. So let's dive in. Let's take a look at Cheyenne Pipeline first. This is a small pipeline, and it's important to let's talk about what the purpose of this pipeline is. So this pipeline moves oil from Fort Laramie area. So this is Fort Laramie here. It also can pull via a joint tariff with Plains, a Plains pipeline, to get oil from Guernsey. And just to level set, Cheyenne Pipeline is a JV, or was a JV, that was owned by HF Sinclair via Holly Energy Partners, or Holly Frontier, owned half of this, and Plains owned the other half. And the point of this pipeline, or the purpose of this pipeline, is to move oil from the Fort Laramie area, also the Guernsey area, via that joint tariff, to this refinery down here in Cheyenne. Now, this refinery, this is a Holly Frontier refinery. HF Sinclair now owns that. That was shut down in 2020. It was one of the COVID shutdowns that happened. So that pipeline has not been serving that refinery since 2020. That refinery was converted into a renewable diesel facility, I believe. So one of the purposes of this pipeline, and the original purpose of this pipeline when it was built in 2006, was to serve that refinery. The Frontier Oil Company, the company that owned that refinery before they had the JV in this, were the one that committed to a 10-year MVC for this pipeline to be built. And I believe it was built in 2007. So that was the purpose of this pipeline originally, and that was the purpose of this pipeline really up until 2020. What I will say is this pipeline diversified itself around that 2020 timeframe area, and also began moving oil further south. So this was actually a leg to move oil from this area, the Guernsey-Fort Laramie area, down to these DJ egress pipelines, specifically Saddlehorn. So if I'm going to layer on Saddlehorn, and we'll have to layer on a little pipeline called the Cowboy pipeline, and this is a pipeline that Plains owns that connects Fort Laramie, I believe this is Carr, to Carr, and then I'll layer on Saddlehorn. So you can see the connection here, and if I actually take off Cheyenne, you can see the integration. So I'm just leaving Cowboy, and I'll take Cowboy off too, why not? So the only thing left on that you're seeing here is Saddlehorn. So Saddlehorn does have a joint tariff with Cheyenne Pipeline to pull from the Fort Laramie area, and it also has a lease. I believe it has a lease on Cowboy. It definitely has a lease on Cheyenne as well. So they're able to source crude using the Cheyenne Pipeline, and that was a way to effectively diversify away from just having it tied to the refinery. So we talked about this with Pony Express, and one of the early advantages to Pony Express was they were able to source from Guernsey, and they were one of the only takeaway options that could source from the Guernsey area. You had Express Pipeline, Enbridge's pipeline that could do that as well, but none of these DJ pipelines had direct access. The lease on Cheyenne, Cowboy pipeline being built, and then the lease that they have and the joint tariff that they have allows them to allows Saddlehorn, and once you get down here, there's probably White Cliffs can probably source some of it as well, not directly but indirectly. But it allows oil to be pulled from the Guernsey Fort Laramie area down to where these egress pipelines are and where they're able to get out in the Platteville area and the Carr area. So what you saw was a pipeline from really 2007 till 2018, 2019, where it was only was primarily moving oil and making money based on just the route from Fort Laramie to the Cheyenne refinery, and it was backstopped by the refiner, Holly Frontier. What we saw 2018 as we kind of go up to today was more and more volumes were finding their way from here onto Saddlehorn, likely onto some of those other DJ egress pipelines. So this pipeline effectively took two roles. One role continued to be the refinery up until 2020, and one role was the getting oil down to this area. Now, when they shut down the refinery in 2020, HF Sinclair, Holly Frontier, is still on the hook for an MVC. Now, I told you they had a 10-year MVC that they kicked off in 2007 when the pipe was built. They re-upped the MVC in 2017 for another 12 years. So it was 45,000 barrels a day re-upped in 2017 for a 12-year time period. So that MVC runs until 2029. So the terms that both companies have disclosed, we don't know the exact terms, but the terms based on the 10Q and comments made in their earnings releases was the cancellation of certain minimum volume commitments or certain contracts in exchange for 50% of the pipeline. So essentially, the way I'm looking at this, or the way I assume this is, it doesn't have to be, but based on the wording, this is my assumption, that the MVC through 2029 went away on this pipeline. Let me just bring up Cheyenne so we can orient ourselves instead of having Saddlehorn up. The MVC went away on this pipeline, worth about $13 million in revenue / EBITDA a year, and in exchange, Plains just gets to own the entire pipeline. So this is pretty interesting. If we look at the economics, the first thing I wanted to do would be like, okay, well, let's think about the economics behind this. Certainly, this is worth something. Being able to pull oil from the Guernsey and Fort Laramie area down to these DJ egress pipelines is important. That is a route that's a desirable route to pull oil from. What are the economics behind this, and who maybe got the better deal, or what's the rationale behind doing this deal? So I'll pull up just a financial analysis, just very basic financial analysis. So if you look at the approximate EBITDA of the pipeline in 2023 and 2024, it averaged around $22 million in EBITDA for the full pipeline. So about $24 million in the most recent year. I think it was, or $23 million in the most recent year, $21 million in the year before that. So let's average it and say 2022 or $22 million in EBITDA. And if we look at that going forward, under a scenario, which is, let's just look at the top line here of the slide I'm showing, under the no buyout scenario, this would be a scenario of, hey, what's the full pipeline EBITDA? And just for simple purposes, I just said, let's leave the EBITDA flat. If there's no buyout, the contract with HF Sinclair stays in place, and you have roughly $22 million of EBITDA until 2029, when that MVC rolls off, roughly in that area, so October of 2029, at which point you would lose a little bit in 2029, and then you would have a re-rate. You would lose that $13 million, and I didn't escalate it for inflation, but just to keep it simple, you would lose roughly that $13 million in revenue / EBITDA fully in 2030. So under the buyout scenario, you could also look at the EBITDA of the full pipeline, and you can see what that does. So eliminating that MVC takes away the 13 million in EBITDA / revenue, and you're left with a pipe, assuming it's a flat pipe, that makes around 9 million in EBITDA. So let's look at this from Plains' perspective. So this is the same chart is on top. On the bottom chart is going to be Plains' ownership, or Plains' allotment of what they would get in EBITDA under both those scenarios. So in a no buyout scenario, what you see on like the third line, the first line on the second table, is you see they get 50% of the no buyout EBITDA from above. So those 11 million numbers are just half of the 22 million. They own half of the pipeline. They would get half of the EBITDA. And then that would drop off once the MVC ran out. Under the buyout scenario, you see they do take a hit, and again, this is not huge for Plains. This barely moves. It doesn't move the needle at all for a company the size of Plains, but it would drop the EBITDA. Now they would get 100% of the buyout scenario EBITDA. So you'd lose the 13 million, but they now own 100% of the pipeline. So they would take about a $2 million hit. But if things were to stay stable in 2030 and 2031, they would be better off. So these are undiscounted cash flows based on EBITDA. There is a little bit of maintenance capital that goes into this pipe, but I will say the amounts of the partnership distributions for these pipelines were pretty close to EBITDA over the last few years, which makes this a little bit more interesting to think about. So again, from a undiscounted cash flow perspective, the break even's right around 2031 for Plains under this scenario. And if we were to discount the cash flows to the terminal value, assuming a flat amount, this is a great deal for Plains. And I think they disclosed in their 1Q financials, they did book a significant gain on this acquisition based on their assumptions. Now, what's a little bit of a head scratcher for me is why HollyFrontier or HF Sinclair would do something like this. This seems a little strange to me, and I'll try to steel man the potential reasons why they would do that. I guess the first reason would be, we do know, and I'll switch back to the map view here for a minute. We do know that pipeline like Double H is coming offline. So under Highlands. So Double H is going to come offline, and that's going to lead to flows decreasing into the Guernsey area unless Bridger can take those flows. And we've talked in previous videos about how I think Bridger can take a significant amount of those flows. Will they get them all? Probably not. We could talk about the potential. A lot of the oil that ends up in Guernsey is going to be from local production. So what's our outlook for Powder River production? Because the value of this pipeline is significantly leveraged by how much oil ends up in Guernsey and Fort Laramie. So places like Bakken egress is going to make a difference. Production in the Powder River is going to make a difference. At $50, $60 oil, what's our outlook for production in the Powder River Basin? I will say that's been a very resilient basin. You're very close to all-time highs on production in that basin, so significantly better than places like the Bakken. So it does seem to be resilient, but at $50 to $60 oil, you probably see some small declines there. And then competition. We talked at another video when we went over Pony Express, how Pony Express has expanded their ability to take oil from Guernsey. So there's competition there. It's not like Pony Express. Pony Express may not be significant. They're probably not significantly bottlenecked from Guernsey, if at all, and they may not be bottlenecked down their line, further down their line. So those are things to think about, and those are things that HollyFrontier maybe was worried about going forward. I still have trouble making the economics work and understand why they did this deal. It seems like a really good deal for Plains and not that great of a deal for HF Sinclair. The other thing you can think about is upside. I mean, I think Plains mentioned that they think that they're able to push more barrels through this pipeline than when Holly, or HF Sinclair own the MVC and own that capacity. That's very possible. Plains likely has a more broad marketing network. The ability for them to market more barrels down this pipeline is probably true. It's probably quite a bit bigger than HollyFrontier's or HF Sinclair's marketing arm. So that's possible too. So again, I'll switch back to the economics really quick. I just don't get it. This pipeline distributed to partners in 2023 and 2024 about 10 million per year on average. So think about it from HF Sinclair's perspective. You're no longer having to pay 13 million in MVC fees, but you lose the 10 million. Again, we don't know. It's possible there's other reasons. They might have a more bearish view on this pipeline than I do. There may be maintenance coming down the pipe that's going to limit distributions from the partnership as well. So the 10 million figure from 2023 and 2024 may not be a realistic figure going forward. But you're essentially trading 13 million in costs, but you get 10 million of it back in partnership distributions, or at least you did in 2023 and 2024 per year. So you're not really saving that much money. And then you have the downside of no longer having those cash flows out to terminal time. It just seems a little strange to me. And it seems like a really good deal for Plains. Again, it doesn't move the needle much for Plains, but it's a data point that says, hey, this company, at least with this acquisition, made a good acquisition. Now, some acquisitions, and we'll go back to the map view really quick, some acquisitions we have a lot less data on, and there's just not a lot I'm going to be able to, or anyone in the market's going to be able to know about. Let me just clear everything here. So a good example is probably this other acquisition that they announced. So this is Plains Oryx system with all the points. And then you can look at, I'd never heard of this this acquisition. So the acquisition of Black Knight, I had never heard of them. So they did acquire a gathering system in the Permian, and this is in the Midland Basin from Black Knight. And we do have a little bit of information on it. It is a system, they do have an intrastate tariff filed with the Railroad Commission that shows that they're gathering from several points, nondescript points, but they are delivering into 2 Plains Oryx points on their system. So those points are Mustang Springs here. So it's to orient yourself, it's north of Midland, and then kind of north, right in between Lenora and Tarzan. So right here is where they're delivering into. And they're also delivering into Patricia Plow area, which is here. So I don't know where these systems are. I did do a search for these systems. Again, I'm pretty deep in the weeds on a lot of these Permian pipes, including the gathering systems, and I was unable to find anything under their name. It's perhaps a subsidiary of that company that has the name and operates the pipeline. I did find a QEP pipeline. It's possible they purchased that QEP pipeline, which is kind of the backbone of the gathering system, and that does dump into Mustang Springs. So that's a possibility, but that's I imagine this is a pretty small acquisition. I mean, the amount was disclosed at $55 million for the acquisition. So not a lot to give you guys on that one. Again, to sum up, it seems like Plains continues to do a pretty good job of making good bolt-on acquisitions. Certainly some risk to this one on the cash flows, but it's just hard for me to believe that this won't be a feeder line into those DJ egress pipelines into the future, because I am somewhat bullish on Bridger's ability to bring down some of those lost volumes on Double H. I think long term I'd be bullish on Powder River production at least staying stable. Again, you might have declines in the short term at $50 to $60 oil, but longer term I think that's a pretty good basin still. That's it. Thanks for joining. I'll try to do a bit of an article on this one as well. I don't know if I'll release that separately or just attach the video, but I realize that not everyone wants to watch 10 to 20 minute videos to get this news. So hopefully an article will help people. Thanks for joining us and have a great day.